A very good evening to one and all present here and welcome to today's webinar. Our Chief Investment Officer, Mr. Sunil Damania, would be unveiling the strategy you must adopt when deciding to book losses. He would also be showcasing some of the past recent exits and whether our calls went right. Towards the end, we'd also be having a brief Q&A session. Simply drop in any questions you have in the chat box and Q&A section. Over to you, Mr. Sunil.
Thanks a lot, Jason, and very warm welcome all of you. You know, this heading looks little paradox, isn't it? Booking losses enhances your portfolio health. Now, you may wonder, how does booking losses improves your portfolio health? Because why? We have all been informed. My apology for the spelling error. Its portfolio spelling has been wrongly spelled. So we all have been informed that you should not book losses. And I think somewhere, if I have to ask investors, are you comfortable? And not only in India, it's across the world. Investors, are you comfortable booking losses? The answer is no. And this is not only a problem associated with the retail investors only. This problem also associated with the many fund managers. And one of the reasons most of the fund managers are not able to outperform the benchmark because of their bias of not booking losses or willingness to admit that the strategy is wrong. Am I right? So yes, you may find this heading little a paradox that booking losses enhances portfolio wealth, but that's exactly what happens. And if I have to give an example of that, suppose you have a body part and that some body part goes little bad, what would you do? Or you have a mango, the bunch of mangoes, am I right? It's a mango season. And if one mango goes bad, what would you do? Would you keep that mango along with the good mangoes, or what would you do? You remove that mango, am I right? And you throw out. The same way, if one company that is wrong company in your portfolio, should you continue to allow that company to be there as a part of portfolio? You should throw it out. So something similar I'm going to discuss in my today's webinar. But before I start with just a disclaimer that this webinar is only for an education purpose. Whenever you invest in the equity market, it does carry a little higher amount of risk, and past performance should not be considered or no indicator of a future performance. So let me start with this. This advertisement struck me very well. And, this advertisement completely changed. So previously people used to say, "Daag अच्छे नहीं है," but this advertisement, "Daag अच्छे है." This is a self-excel advertisement saying that if you get dirty while what you do, it is good, isn't it? And previously people used to, think that's not something very good. It completely changed the perception. Daag अच्छे है. Same way, loss booking अच्छी है. And I'll explain you why. In my presentation. If you don't agree with any of my statement, please feel free to ask, and I would try my level best to satisfy you with my answer. For some reason, if you are still not satisfied, then we will leave it at that, but I'll definitely try my attempt. So, daag अच्छे है. Why we believe even booking losses is good. And let me tell you, because there's been a lot of hue and cry, which I keep getting a lot of, my customer care department also informed. So today we are all working from home from last 3 days. So the last 2 days, we are all working from home. And tomorrow also we'll be working from home, purely because there are many of our employees, they are down with the viral fever or the COVID. And we wanted to play a little extra cautious, and that's why we are doing this webinar from home. Now, my customer care department informs that people are a little concerned, why are we booking losses? And when I did some reviews with our Mojo Infinity customers also, they are also concerned about why are we booking losses? Why can't we hold on those companies? and assume that the company is not doing well. Will it not do well because the quality of the company is very good? Like one company that I distinctly recollect was Tata Steel. There was a lot of worry. Tata Group company, Tata Steel. Why should we book losses? Vedanta, we ask you to book profits. So idea is not only booking losses, even the good quality company, we are booking profits also. But the basic question is that why are we so quick? Why are we so in a hurry to book losses? Will the price not bounce back? And if that is so, why not to hold on to company? But we strongly believe there is no point remaining invested in a company which is going to underperform. Why? Because underperforming company is like a dead investment. And we are all here to create alpha on the portfolio. We are not here to bet on the dead investment, because dead investment don't create alpha. But then you say, how do you prove that? Basically, because why should I accept your statement at the face value? Why should we not? And you may give me tens of examples that companies do bounce back when the things goes right. I agree with you. Yes, sometimes company may bounce back, but we don't know when it will bounce back. Will it bounce back after 3 months, 6 months, 1 year, 5 years, 10 years? We don't know. And we are not saying that once we exit, we cannot re-enter that company. But what's the point holding on to that company which is going to keep underperforming for a longer period of time? So let me show you some data. So, before we move forward, let me just see what happened to the company that we exited. Have they gone up? What we have done, we have looked at last 6 months, maybe more than 6 months. If you ask me 6 or 8 months, what happened to the company that we asked you to exit? Whether it profit or whether it losses, because ultimately, what is critical is that whether the script has what happened to the script. Total 86 companies have exited, out of which 77 moved down further from the price we asked you to exit, which gives us a success ratio of 88%. In other words, to exit from that company is a right call. And I distinctly recollect some of you people did troll me on my Twitter handle when we asked you to get out of a company like Laurus Labs and other Sequent Scientific. You people did blame us. We don't understand the market. Divi's Lab, something similar. And I don't go into to meme on a social media. The rest is history. We don't let our performance speaks, because sometimes in a short term you may get a little excitement. Market Mojo is wrong, Sunil Damania is wrong. The moment you expand the horizon, you realize how precision that recommendation was, which is what in your interest that we advise, and rightly so that investors can create an alpha. But human mind is so great, it remembers other people's mistakes, other people's wrong. We hardly remember why we have gone wrong. Am I right? And hence, we believe that booking losses is not a right thing. But I must tell you, 88% of the companies moved down. Now, as a Markets Mojo, we have a choice, and I'm going to give you quite a few examples in my presentation. See, we have a choice. We don't book profit or we don't book losses and continue to hold that company. I'm so sure many of you would be really happy about it. Am I right? And you must be doing something very similar in your personal portfolio also. Am I right? So this webinar is not only Markets Mojo. I want to educate you and basically apply this logic in your personal portfolio also. Because if you do that, you will create wealth. It is for your well-being I'm doing this webinar. So please listen to me very carefully. Remove all your human bias. Listen to me and let's discuss and let's argue and debate more logically. Okay. Now we have two choices. We don't book losses, we continue to hold that company. What happens? Is there a guarantee that this company will bounce back in the future? No guarantee. And by not releasing that fund, by getting out of that company, you are having a debt investment in the portfolio. And debt investment don't create alpha. Am I right? You know, if you look at many of these experts, those who come and they talk about, you know, the company's working capital cycle has gone bad. What do they mean? That means more money is got into, which is not yielding any effective income for the company, and that pulls down ROE. So what applies to the corporates in terms of working capital, something similar applies to the individual investors in terms of debt companies in the portfolio, which is underperforming companies in the portfolio. What happens because of that? It brings down your return on equity or your IRR on the portfolio drastically. Tell me one thing very frankly, and I want everyone to be frank with me. Jason, can we do a very quick survey?
Yeah.
How many of you own a company for more than 5 years and is incurring losses? Answer is yes or no. Simple. Yes or no. Jason, you got it? More than 5 years. And that I'm talking about in your personal portfolio. Market doesn't have any company which we continue to hold for 5 years. We don't believe in buy and hold strategy. And I'll explain you why also. But let's do this. 5 years or more, and it's incurring losses. And the reason you are not getting out in anticipation, one day this company will go above my purchase price. Jason, are you ready with that?
Yeah, it's live.
I want everyone to participate. %39% people have participated. I can see 54, 56. Very good. I want 100% participants. And please, everyone request, please participate. It's my request to all of you, please participate.
I can see a few investors saying that they've entered the market very recently, so they won't be able to participate since it's fine.
Okay. No, fair point. That's a fair point. That's a fair point. So unfortunately, we are making an assumption. So yeah, that investors, I can see 77 participated. Okay. Okay, we'll wait for 10 more seconds, Jason, before at least I wanted 80% participation, but I don't know, 78, 79. Wow, 80%. Okay, let's conclude. Yeah, let's conclude. I'm happy that the investors, those who are attending the webinar, most of them are smarter investors. Why? Because 73% says that they have not, they don't have a single company in the portfolio which they're holding for more than 5 years and incurring losses. But we do have 27% of the investors who says that they own company. And my request to this 27%, please, sir, improve your strategy. I can tell you with confidence that your portfolio would be underperforming. Why? Because your ability not to get out of a company is biggest hindrance for creating a suboptimal returns on the portfolio. So now that brings me to another interesting this one. So, you know, you always have say, why are we booking losses? And let me give you some examples. We book loss in RBL Bank. And we all know what happened to the RBL Bank, am I right? Where Mr. Ahuja tenure did not get extended and so on and so forth. We advised buy on 16 Feb 2021, not this year, last year, at 258 rupees. And the moment we realized this bank is going to underperform, what happened? We asked you to exit at 2111. We asked you to book losses 18%. And remember, at that point of time, market was doing extremely well. 2021, where the banking sector was supposed to do extremely well. What did we advise you? Book losses. Some of you people got agitated. Such a good bank, so many fund managers have invested. And I distinctly recollect the day we advised you to exit, one leading broking house came out with a buy report on that company. We said, please follow our advice. Now, was it right decision? Was it wrong decision? We had a choice, not asking you to book losses. And we could have looked much better in your eyes, am I right? Because we are not asking you to book losses. Today, we are becoming a villain kind of stuff because we are asking you to book losses, which you are not able to understand. But Papa, we are asking you in your health, in your good interest, because you will realize this as the time passes. Am I right? Sometimes you need to take a bitter medicines to improve the health of your portfolio. But we are not willing to take that bitter medicines because अपको टेस्ट अच्छा नहीं लगता, उसको बहुत मीठी मीठी बातें अच्छी लगती है, कोई सीधी तीखी बातें कर ले तो अपने को अच्छी नहीं लगती है. Look at that company. From the 26th March 2021 till 23rd June 2022, the scrip is down by 60%. We asked you to get out at 211. The scrip is now only trading at 84 rupees. This is as of today. Was it the right decision to book losses? The answer is yes. But you may say this may be the exception. No problem. As I told you, 88% of the companies have gone down in last 6 months. We advise you to exit. Another company, Dr. Lal PathLab. This company we advised by on 3rd August at 3883. And on 29th October, we realized this company is going to underperform. We asked you to get out at 3513 with a loss of 9.5%. The next day, the Omicron hit the country and the script did move up. If you look at it, the script did move up after we exited. Am I right? Can you see this? It did move up to 3886 after we asked you to exit from this. You people got a little agitated. Why are we booking losses? One leading fund manager has been buying this and is recommending coming on TV channel to buy this company. He's doing even now as we speak. We said, please follow our advice in a disciplined manner. Why? Because our diagnostic was 100% right for that company. What happened to that company? The company we asked you to get out of 3,500 today is quoting at 1992. Was it a right call or was it a wrong call? So sometimes, some short-term price movement should not come to conclusion. That's why we keep saying, please follow our advice in disciplined manner and you will see the benefit of that. But again, you may say this is an exception. Let me take another example. Vaibhav Global. This company, I picked up as a stock of the month. On 9th April at 885. Exactly last year, same time, that is 23rd June 2021. Today is 23rd June 2022. Last year, same time, we realized this company is not going to create wealth. We asked you to exit at 829 rupees. And I must tell you, if you look at even as on today, it boasts of some of the finest investors in the country invested in Vaibhav Global. But we realized this company is going to underperform. And it's going to underperform. We asked you to get out at 829. What is the price of Vaibhav Global today? 307. So in 1 year, while the market is almost at the same level, the scrip is down by 63%. Was that a right call or wrong call? It is definitely a right call. So start learning that booking losses is a good thing. But unfortunately, in this country, a lot of disinformation has been spread by some of the vested interests, asking you to buy and hold. For what? If it's not going to create wealth for you, should you basically follow buy and hold strategy? See, the most of the time, investors' portfolio would have underperformed. So while I do understand that 73% of investors do not have a loss-making company holding for more than 5 years, if I have to do a survey right now and ask how many people's investors' portfolio is underperforming for 2 years period, most of you will say yes. Most of you would say yes. Can we quickly run that? My portfolio is underperforming for the last 2 years. For 2-year period, yes or no? Okay, till such time Jason is ready with the poll, let me move to the next slide. The buy and hold strategy. Unfortunately, buy and hold strategy does work. I'm not saying it doesn't work. it works 1 in 200 companies. I again repeat, 1 in 200 companies. In other words, the balance 199 companies, you are not going to create wealth for yourself. It's extremely difficult to find out which company is going to be the wealth creating story for a longer period of time, 10 years down the line. In 2012, the company that you see are the darling of the investors: Reliance Communications, Vodafone Idea, JP Power Venture, Yes Bank, Punjab National Bank, Sri Infra, BHEL, SAIL, and the Castrol. The fine mix of private sector, public sector, and spread across various sectors. What happened? You bought this company and you continue to hold. I know many investors continue to hold Yes Bank in the portfolio. Even as we speak, the many of you must be holding 1% beverages, PC Jewelers, DHFL, India Bulls, and so on and so. In anticipation, one day my price, मेरी price से उस company ऊपर आएगी. But the fact of the matter is that last 10 years, the Reliance Communication you had invested 1 lakh, the value has become only 4,000 rupees. Forget about making money, you lost money. Vodafone Idea, part of Kumar Mangalam Birla at that point of time. Now they got merged, post Jio coming in. The most valuable company once upon a time in Kumar Mangalam Birla, Vodafone was, or Idea was, 81% down. 1 lakh has become only 19,000. Forget about making money, you lost your capital. JP Power, part of Nifty 50, down by 81%. Yes Bank, down by 80. One of the, and this bank received so many awards, Best Bank Award, am I right? Down by 80%. Punjab National Bank, one of the finest PSU. Sri Infra, one of the biggest, one of the most fancied NBFC once upon a time. BHEL, India's largest power equipment manufacturer, 63% down, and so on and so forth. And Castrol, MNC company, down by 15%. So point buy and hold strategy. For every one successful buy and hold strategy, there are 199 unsuccessful story. But people will make you believe that each and every buy and hold strategy will work for you. Unfortunately, that's not right. And let me give you a classic example. We all know HDFC Bank. Did someone tell you that HDFC Bank over a period of 5 years it's underperformed the benchmark? Forget about 5 years. 4 years underperformed. 2 years, 3 years underperformed. 2 years underperformed. 1 year underperformed. So what is buy and hold strategy? And I'm talking about India's best, the most valuable bank in the country. Every company has its own hay times. And when that hay times goes away, the companies struggle to outperform. Companies struggle to outperform. Not only HDFC Bank, India's largest four-wheeler company, the car manufacturer, Maruti Suzuki. In 5 साल में, Maruti Suzuki has given only 11.8% return. This data is as of today, versus Nifty, which gained by 66%. Okay, had you put this money in a bank FD, you would have made more money in 5 years period. Buy and hold strategy, am I right? And that's why I keep telling investors, for every one successful buy and hold strategy, there are this. And that's why market does not believe in bank. One of the reasons markets has been able to create wealth for the investors over a longer period of time, because it attaches no human emotions to the company. You buy company based on the merit. Sometimes we do go wrong, I admit, but we admit our mistake. We are not that stubborn. We are not that, which optically creates an illusion that we are always right. We come upfront and we tell you in a very frank manner, in a very honest manner, yes, this company we ask you to buy, please book losses. Why? Because we believe that if you don't get out of that company will underperform significantly, which will not make money. Our aim and goal is to create wealth for you. So sometimes we look little villain to you, but we are not villain. We are in fact working in your interest to create wealth for yourself. Sometimes people don't realize what is good for them and what is not good for them. So sometimes when we ask you to take the bitter pill, please do that. It is in your interest. We are asking you to book losses. So why investors are averse to book losses? Not only you and me, but some of the biggest fund managers. You know, and it's a behavioral finance issue. Money makes people emotional. जब आप कोई इमोशंस में डिसीजन लेते हो ना, that decision bound to be injurious to your wealth. Money by nature is people make emotional. Emotional होते हम लोग. अपना ego hurt होता है. How can I be wrong? And you know, our mind will then try to figure it out why this company continues to remain a good buy or continues to remain a good hold. तो हम लोग वही पढ़ेंगे जो अपने माइंड को पढ़ना है. Am I right? Suppose if you have invested in ABC Limited, if there are 9 negative reports for 1 positive report, now you will try to read that positive 1 report only, and you will try to figure out, and then you try to convince yourself, ये company चलेगा. People hold on to their ideas like they are children. Emotional हो जाते हैं. मेरा बच्चा है. Why should I get out of this company? And the moment if you tell them that you are wrong, they get agitated because emotions है. Am I right? If I tell you get out of a company in emotions में, नहीं मैं क्यों बेचूं? अच्छा company है. Tata Steel, you did not want to get out of it. Am I right? When we ask you to get out of Sequent Scientific, you did not want to get out. Laurus Lab, no. Divi's Lab, no. What happened? We asked you to book substantial profit at that point of time. Am I right? In some of these companies, we said lock in the profits. But नहीं, अपने को तो नहीं, अपने को तो अपना human emotions आना है. And normally investors have a very bad habit to make purchase price as an anchor price. मैं अपने purchase price से ऊपर जाकर फ्री पे बेचूंगा. That thoughts do come to us, am I right? And many times we would have decided not to get out of a company. Why? Because you are waiting in anticipation that it will go above my purchase price. Whether that comes after 5 years, 10 years, or never happens, that company goes for bankruptcy. A friend of mine, he invested in a company called, which company which was the demerger kiya, Syntex. And I told him not to go ahead, not to buy. He did not listen. He got a little agitated the way some of other investors do get agitated. It's a good company. Sunil bhai, आपको समझ में नहीं आता ये company में क्या है. And you have to admit in a humbleness कि ये समझ में नहीं आता है कभी-कभी. What happened to that company now? Is it making money? You lost money, am I right? Same investors. I distinctly recollect Bajaj Hindustan was coming out with a rights issue. And he did ask me at that point of time, should I apply? And he has already invested, so that's why he got a rights issue. And I said, no. He did not listen. He did apply for the rights issue. The rest is history. So, remove that emotion out of it. If you really are sincere about creating wealth, please remove emotion. And markets mojo, the beauty about markets mojo that it creates wealth for the investors. You know, sometimes that's we do underperform, right? As we speak right now, we are underperforming. We admit that. But we are very confident we'll outperform. Why? Because we don't attach any emotions. And once you remove that emotions part, your decision making becomes more rational. And the moment that rationality comes in, probability of you making success goes up substantially high. Now, let me ask you a very simple question. You know, admitting a mistake is a good thing, as we do. We come in front of you and ask you to book losses, am I right? But investors will not. And give a classic example. Assume that you happen to buy a wrong car. Now, the car keeps giving you a lot of problem. You spend a lot of money on repairing that car. Now you have a two choice. Either you decide, yes, I bought a wrong car. Let me not spend more money on repairing that car and let me buy the new car. But you don't do that. You keep buying, you keep spending more and more money on repairing that car. Eventually you end up spending more than what you would have bought actually a new car. Which is the wise decision to do that. But हमारे यहाँ पे क्या होता है? You first get into a wrong company. And that repair is nothing but averaging. You will buy more of the same company, more of the same company, more of the same company. क्या होगा आपका? आपका पैसा बनेगा? नहीं बनेगा. So if you know that you bought a wrong car, you get out of that car. Even if you have to book losses, you book losses and you buy a new car. If that logic works in car, why not in the stock market? Why you don't want to apply that logic? How can we so apply different yardstick for car and different for the stock? You should not do that. Am I right? So think logically. Galti kiya hai. Everyone makes mistake. I have not come across any single investors, including me, who have not made mistakes. But the key is to admit the mistake and move on. Ego mein mat aanega. How can I be wrong? I know much better than the market. Market is full. They don't understand the values from this company. I do understand. And I know one fan manager, I don't want to name him, very well respected. He doesn't willing to believe what is there on the writing on the wall. He believes that he is right, other people are fool. Unfortunately, he will make fool of himself. Am I right? So be humble and be this one. We admit, yes, we can go wrong. We will go wrong as an investor. Accept and move on. But keep don't spending more and more on in the same company and don't do averaging. So do not nurture your wrong decisions. If you do that, I'm afraid you will not make money. And I always say people, two impediments to wealth creation: fear of loss and greed for a bigger profit. Am I right? Let me explain you this. We don't want to book losses. So our exit strategy, it's always a little challenging. In fact, most of the investors don't have any exit strategy. You would have screener for entry. Have you ever made screener for exit? The answer is no. Very few would have done it. पहले तो अपने को लॉस बुक नहीं करना है. And second thing, जहाँ पे profit बनता भी है, we don't want to book profit also. Why? Because we have a greed for a higher, bigger profit. वो profit कभी आता नहीं है. The script goes up and goes down. HDFC Bank is a classical example. Had you desired to book profit at the right level, you would have made a lot of money. Today you are struggling to make money because it's underperforming now over a period of 1 year, 2 year, 3 year, 4 year, 5 years. I'll give a classic example. So this is before pre-COVID I'm talking about. I used to go for a studio to CNBC Bazaar. And one gentleman next to me who is an expert, he has also come as a panelist there. And during that break, we were discussing and he said, I'm investing all my, and he's a salaried guy. So he said, every month I get a salary, certain portion of that money I invest in HDFC Bank as an SIP. And at that point of time, I told him, I think we are making a big mistake of your life. Don't do that. Because we are getting carried away by the recency bias. It's a time to get out of a company, not to put in more money. But he had a greed of fear of bigger profit. Unfortunately, I don't know, because since then I have not been visiting the studio, so I'm not able to speak to him. But I'm so sure he must be remembering my words. So fear of loss and greed for bigger profit are the two biggest impediments for wealth creation. Let me give you and I would request, if you have a time, you must read this gentleman called Gerald Loeb. He wrote a book called The Battle for Investment Survival. It's a very beautiful book. And he writes, the most important single thing I learned is that accepting losses promptly is the first key to success. I again repeat, accepting losses promptly. Promptly is a very big word. I want to underline on that promptly word. Is the first step to success. But हमारा तो ego है. How can I be wrong? And when we book losses, you people think we are full. And you will realize this, as the time passes, because then you will see a merit of what we were doing in terms of our performance. So that's the point number one. This is a one quote of Gerald Loeb. Second thing is not whether you are right or wrong. Okay. That is not important. How much you make money when you are right and how much you lose when you are wrong. And this is a quote by George Soros. Everyone would know about him. Am I right? And I've underlined the one, how much you lose when you are wrong. If you know that, you can curtail your losses, then your probability of creating wealth on the portfolio goes up very, very high. But our problem क्या है? हमको loss book करना है नहीं. So it is not whether you are right or wrong, that's important, but how much money you make when you are right and how much money you lose when you are wrong. When you are wrong, accept and move on in the life. And the last quote, Peter Lynch, and this quote has been so famous that Warren Buffett quoted it: selling your winners and holding your losers like cutting flowers and watering the weeds. That's a Peter Lynch. What he says is that we are too quick in terms of booking profit and too lazy in terms of booking losses, or sometimes we do averaging. That's what we mean by watering the weeds. Now, these are the famous successful investors have said. It's not my words. Please give credence to that. And today onwards, you need to realize that even in your personal portfolio, learn the art of selling. And once you do that, I can tell you with confidence, your portfolio will start outperforming significantly. So remember, and this word I want to tell you, and this quote I just happened to read, one of the guy who basically, I was reading McKinsey today, and in McKinsey, they've interviewed one gentleman, I'm forgetting the name, who founded Netscape browser. Of course, that browser has been closed down. That was the first browser which was invented in the country. He said, best product doesn't always win. We all know, am I right? Jaruri nahi hai ki the biggest, largest or successful product is the best product. The same way, the best company may not always create wealth. So you may have a strong reasoning that company is good, but if it's not going to create wealth, why to hold on to that company? Accept, na baba, and move on in life. So remember, best product doesn't always win. The same way, the best company may not always create wealth. So company may be good. If it doesn't create wealth, please say bye. Don't get emotionally attached to that. So now I want everyone to define your exit strategy. See, many experts will come and give you tips to buy. No expert will come and tell you when to exit from the same. Am I right? You must be happen to listen to some of the experts coming on TV channels or a newspaper or magazines on a social media. You will see more buy tips. You will never say same expert. If he is recommended by, he will never give you exit strategy. And as I was explaining you, investors normally a buy strategy. Screener पे लगा देगा price to book value इतना होना चाहिए, return on equity उतना चाहिए, growth उतना चाहिए, operating profit margin इतना होना चाहिए, ये है वो है. But sell का क्या strategy है आपका? Have you defined? We are absolutely ad hoc. और ad hoc exit strategy में कहीं पैसा नहीं बनता है. Okay, so you ask yourself. Okay, you need to ask yourself, how many times you hold on to a company that we are making losses, and you in the hope that it will create an alpha for you, and many times you would have realized you should not have hold to this. Okay, so my request to all of you, define your exit strategy to create wealth. Even that exit strategy amounts to book losses, please do that. Some companies may move up after you exit, but that would be more of an exception than the rule. So I want to tell you, booking losses अच्छे है. जैसे डाग अच्छे है, वैसे booking losses भी अच्छी है. Have a courage to accept bitter pills in life, because if you don't do that, I'm afraid you will not be able to create profit on the portfolio. If you don't agree with me, I would be more than happy to have a discussion on this topic. And I'll request Jason to please put only those questions with relating to this today's topic. Other than, if we have time permits, then we can take up other topics. Markets Mojo, one of the reasons why we are able to create wealth over a medium to long term, of course, we are underperforming, as I admit very frankly with all of you, in the short term. But the reason why we create over a medium to long term, because we follow our exit strategy in a very powerful manner. And if you want to create wealth with Markets Mojo, since we are celebrating our 7th anniversary, it's an open invitation to all of you to come and join and be part of our celebration, where we have an offer of only 14,999, which gives you 2 years and 3 months extra subscription, which works out to near about 550 rupees per month, less than 20 rupees per day. I'll request my colleague Jason to please drop this link so that you people can avail this. Jason, have you done before we open up the floor for question? Can you release that poll if you don't mind?
Yes, a few investors have asked whether the poll is for our market exposure portfolios or for our personal portfolios regarding the 20%.
Personal portfolio.
Okay. I'll just pick this first question till then. So the one question I could get from a number of investors is that they say that this is by Mr. Joseph. He says prompt is the key word. I feel you're not prompt in booking losses, as you usually wait for it to fall 20-25% and then the stock is asked to exit.
So in a hindsight, what you are saying is right, sir. Sir, no one knows the top has been formed. The top is known only after it has been formed, right? So in a hindsight, what you are saying is right. So our philosophy is, to write the maximum upside. But the moment we realize it's going to underperform, we do advise you exit, even if amount to booking losses. So you need to look at this way. So there are two aspects to it, okay? So we try to maximize the profit. At the same time, we try to minimize the losses. So sometimes in order to maximize the losses, we are not able to exit at the right time. But then what we are able to achieve, this other objective, is to minimize the losses. And that's what exactly we have been able to do that, isn't it?
Okay, I'll just run the poll then.
Yeah, please do that. I want everyone to please participate. Wow, I can see 50% already participating in first 10-15 seconds. I can see 61% participating, 63% participating, 64%, 65%. I want everyone to be honest here. क्या तकलीफ है? आपका personal portfolio and be honest in your response. यहाँ पे कोई इनाम नहीं मिलने वाला है, तो please be honest in your response. I can see 73% participation. Jason, will wait for some more time, sir.
Yes. Okay, I'll end the poll.
Yeah, please. As I can see, 55% do admit that their portfolio is underperforming for last 2-year period. 45%, congratulations, because 45% is not a small number, if you ask me very frankly. So even though 55 is much higher, is higher, it's bigger than 45, but 45 itself is not a small number. So congratulations whose portfolio is not underperforming, and those who are underperforming need to ask themselves, where am I going wrong? And one of the reasons you could be going wrong, that you are not realizing your mistake and you're sticking around with that company for a longer period of time. Over to you, Jason.
Okay, Mr. Sunil, when you gave the example of the 88 companies, a few of the investors have asked, what timeline are you seeing these companies for?
Which company? Sorry, which percentage?
The slide in which you said so many companies underperformed and so many companies went up and went up.
6 months period, sir.
Okay, I'll move on to this next question. So this was asked by Mr. Shyam Sundar. He says, based on what factors, apart from technicals, your IP suggests that the company will underperform in future, and you ask us to book losses?
So, sir, our score is a function of quality, valuation, recent financial performance, and the quality, without and technicals. Now, based on these 4 dots, we derive a score of the company, and based on the score, we get an idea whether this company will underperform or not. Number 1. Number 2, we also have now introduced fall from high as a concept. So if some companies fall much higher than the benchmark, we do advise exit from those companies, suggesting that even though the technical may be bullish also, giving an indication that there is something which our IP is not able to detect, but market is trying to discount that. And if that's so, might as well move out of that. So that's the way it works. During result season, it's also a function of result. So if the company's performance not so good, the score deteriorates, and that gives an idea that this company is going to underperform.
I'll pick this one question by Mr. Shantanu. He says, the 1AG, I'm very hopeful that the Mojo portfolios will outperform. But with all respect, I don't think investors are happy because you are booking losses. It's more because you are buying those companies which require loss booking.
Sir, you are making a statement out only out of emotional, this one. Sir, okay, let me ask you. Okay, we are making losses. We are asking you to book losses. Whatever. Now we are making an assumption that other fund managers are not booking losses. Am I right? And hence, they should be doing well as compared to what we are doing. Is that the fair assumption? Am I right? Because वो तो ज़्यादा सियाने हैं हमारे से. So they should be making more money for the investors. Are you aware, sir, that India, some of the leading mutual funds are performing very badly? Their performance as high as 29 and 30% that they are making losses. Are you aware about that? But you wouldn't know. Why? Because आपको पता नहीं हो क्या book loss करा है. Because we are in markets, Mojo is such a open and transparent platform that you can figure it out. But you will not be able to figure it out. Why? Because वो पता ही नहीं वो mutual fund manager कौन से भाव में लिया कौन से भाव में बेचा है. As I speak to you, I'm taking you to the. So this is not my data. Okay, so don't. This is I'm on Morningstar. There is a Morningstar is one of the leading. It's in world. It's a MNC company listed on I think an NYC or now I'm not very sure, but it's a listed company on Nasdaq or NYC. I'm not sure, but they trade mutual funds all across the world, and this is India's performance. Can you see some of the mutual fund is down by 31%, 21%? This is YTD. That is in 2022 only. So 24% healthcare have, then there is a large and mid cap is 24%, 24%. And look at the category average. Am I right? They are also focus is down by 14% category average. This is only in YTD. That is beginning of January 2022 to 23rd, 22nd June 2022. If someone has to be down by 27 and 31%, mini script would have gone down by 50% because 31% is an average. Am I right? So आप उसको क्यों नहीं बोलते? चलो हमारा तो सिलेक्शन खराब है. चलो मान लिया आपकी बात. Try to understand which market we are. If you look at YTD, and let me take you one more thing. If you look at YTD, then 90% of the companies are are down. So let me look at BSE 500. Okay, can you see that? Out of 500 companies, 408 companies are lower than what level they were at the end of 2021. And that means, and look at everything is down, everything is in red. Can you see? And let me take you all at dash is YTD. Can you see anything which is in green? Bearing auto, which has happened, which is CPSC, everything is in red. So making money, there are no places where someone could basically create an alpha. The market has been extremely sell. And sir, had that been what you are saying is right, we would not have been able to create wealth for the investors. Am I right, sir? So no, we are not buying companies to book losses, sir. Yes, but this market, we are of the smartest lot. And see, you will not realize and you will not appreciate this. But the moment time passes, you will see a lot of merit in our, because we are a little unorthodox in that sense. The orthodox suggestions is what? You buy and hold. We say you book losses. And if you book losses, what happens? You are removing that dead skin from your portfolio. A new skin will come that will flourish and that will help you to make money. So please, please, please see a merit in our portfolio, have patience, and we are very confident. And I can tell you on 23rd June 2023, the same person will come and say your advice was right, your strategy was right. Unfortunately, we could not see the merit in that.
Okay, I'll move on to this next question. I think you mentioned about screeners. So Mr. Rao has asked, to book losses, will you please suggest some important parameters so that we can generate a particular screener?
सर सिंपल है, मार्केट्स मोजो का स्कोर देख लीजिए. इफ इट इज लेस देन 70, is less than 60 and the script is falling, please move out of that company. That's the simple screener I would suggest you. Simple screener. Score is closer to 60 or less than 60 and the script is falling, please move out of that company immediately.
Okay, I'll just pick this one question. I think when you were giving the car example, Mr. PR has written that Sunil sir, car has more of an emotional attachment than stocks. That is why we have antique pieces and are resistant to sell the car and can't relate it with stocks.
So I talk about the wrong car. I never talk about the antique cars. And I tend to see that very few people would have antique cars in their possession. Very few. Am I right? The government of India doesn't allow anything which is beyond 15 years to have a registration gets this one. In fact, I don't agree with you. In fact, the people are more emotional about the company that they hold than the car. And you look at, scan it across. I think the most emotional people attached to the car are the Parsis. Unfortunately, they are in a very minority. There are very few legs Parsis right now in India. But investors are emotionally attached. I've seen many investors, if you ask them to get out of a company, they will not get out. And sometimes the argument is what? अरे मेरा तो 10 रुपए का खरीदी है. अरे but Baba, that's 10 रुपए का खरीदी has gone to 1,000 rupees, now come down to 200 rupees. You could have a good opportunity to get out at 1,000 rupees, not 1,000, at least 800 rupees, not 200, 700. What is the point not making booking profit in that counter? That's how it works. So they are emotional.
Okay, I'll pick this one question from Mr. Lakshmi Lalwani. He says, hi Sunil sir, as you're always saying, we are a long-term investor and currently the market is in a bear mood and very volatile. So in this market, we can expect a loss on the stock. So is it a wise decision to book loss in bear market? Why can't we hold on for it for some time as we are investing in the model portfolio and as fundamentals shouldn't be changed so fast to compel us to book losses?
So sometimes, sir, fundamental may improve, but the company may not outperform. I'll give you classical example, Larsen and Toubro. So see, we normally tend to get confused with the market and the stock. The market may go up, but the stock may not go up because every rally will have a different winners. Classical example, Larsen and Toubro. So if you look at Larsen and Toubro in last 10 years, let me, can I take in, Jason, 1 minute? Let me take you to the website. Yeah. Okay, let me take you to the Larsen and Toubro website. Okay, Larsen Toubro page. I'm taking you to the returns of Larsen Toubro. Last 5 years, only 30% return. Underperformed. Last 10 years, only 147%. Has Larsen & Toubro not reported better growth? Is a good quality company. Each and every government did spend money to improve the infrastructure. Am I right? But that company did not make money. So why do you need to? So this was the same company which was darling of the investors in 2007, 2008, am I right? But when that time the Sensex was only 21,000. Today we have above 50,000. This company did not participate as much as what it should have participated in 2003 to 2007 really. But we get emotionally attached. And that's where you don't make money. So that's why I said sometimes the great quality company will not create a wealth for you, which I said that, remember. Okay, as the same best product doesn't always win, the same way the best quality company will not create wealth for you. And hence my request to all of you is that don't get carried away by this one. And if the company is good, you can always buy at the right value. But that doesn't make sense. You continue to hold for many, many years and seeing your money basically not making money for you. And remember, market will go up. Market will go up. Not necessarily the same set of companies which moved up previously will move up. Classical example, before COVID, banking was the darling of the investors. Am I right? Banking and NBFC. Market crashed in March 2020. And the market not only recovered, moved much higher. Did banking stocks created well for you? Did NBFCs created well for you? Answer is no. Good quality. HDFC Bank, classical example. Did it make money for you, sir? Answer is no. So that's why remove human bias. We tend to believe what has worked in the past will work in the future. Recency bias, we call it. That doesn't work, sir.
Okay, I'll pick this one question by one of the investors, Mr. Sami. He says, Sunil, sir, you always maintain that model stocks will outperform once the market turns for the better. If so, then why do we have many exits? Don't you have confidence in the stocks the IP is picking?
Sir, we select the stock based on IP and we exit the stocks based on IP. Are you suggesting that I should apply my IP only while entering the stock and not while exiting the stock? That will be unfair. That means when I ask you to follow in discipline manner, how can I be in discipline and not follow the IP? The stock comes on IP, stock goes out based on IP. That's just very simple formula, sir.
Okay, I'll move on to this next question. Yeah, so this is by Mr. Shailendra. He says, I'm a long-term member of Markets Mojo Professional. I follow the model portfolio recommendations. Do you recommend any stop loss strategy for stocks in the model portfolio?
Sir, model portfolio and Mojo Infinity is our responsibility when to exit. We will tell you when to exit from that company. And it's our promise that we will let you know. So if you look at it, each and every time when we decided, believe that this company is going to underperform, we did ask you to exit from that company, isn't it? So it's our responsibility. You don't have put any stop loss. It's our responsibility.
Okay, and I also got these questions by a few of the investors, like Mr. Venugopal has asked, as a thumb rule, at what percentage of loss should we sell stocks from our portfolio?
Sir, what percentage? 100% निकलने का, sir. What percentage मतलब क्या? If the company is going to underperform, it's going to underperform. Simple.
I think, what percentage it falls, that time we should exit. He's asked, is there any thumb rule?
No. Okay. That's a brilliant question. Okay. So reason for you to exit is not only because of price fall. Reason for you to exit should be the reason you bought it, that company. Has it undergone change? If the answer is no, irrespective of what happens to the price, you should not exit. But if the reason to change, that the reason why you bought that company and that factor no longer holds true, then you should exit, whether at profit or at losses. So this logic should be applied both on profit or losses. Don't make purchase price an anchor price. I hope it's clear to you. Again, I repeat for benefit of everyone. You had a reason why you bought. You thought certain story will play out in this company. That's why you bought that company. As long as the story remains intact, you should continue to hold that company, irrespective of the price movement. The moment the story undergoes change, whether it profit or loss, you should get out of that company. I'll give you a classical example. We recommended Tata Consumer Product as a stock of the month, and we did advise you to book profit. Kitna profit with that, Jason? I think 50% or something. My memory is right. We advise you to one. Let me just see what Tata Consumer. We advise you to book profit at 1 second. And the reason why we advise, because the theory that we believed in was no longer going to be. We asked you to book profit at 57%. 57%. We asked you to exit from that company. Why did we ask you to exit? Price nahi gira tha na tabhi to. But the reason we asked you was the theory, that the belief that we were thinking that this company should be able to gain the market share of Pulse's business. That did not happen. Somehow company was not able to execute the strategy they were supposed to execute that. And we thought this company will not create wealth, and hence we asked you to exit. So never make purchase price and anchor price to decide whether you should exit or not. I hope that's clear.
Okay, we've got this one particular question by Mr. Vineet. He says, Sunilji, I don't think you're feeling the heat when the portfolios are underperforming. And on top of that, you are asking to book losses, but you don't track markets regularly. So could you provide your view on this?
Sorry, come again. Sorry, I got confused.
He's saying you don't feel the heat when the investors' portfolios are underperforming. And on top of that, you're asking us to book losses. Why don't you track the markets regularly?
He's asking me or he's asking you?
Asking you, sir.
Why don't I take the market regularly, sir? If I'm not taking the market, I would not be in front of you, sir. So what makes you believe that I'm not taking the market? I don't. And are you saying that fund manager who has reported 30% loss in first 6 months Are they also not checking the market regularly? Is this the way you can define whether someone is checking the market or not? See, that's why we're getting all emotional about this thing, you know. See, when you come to the equity market, you need to create a mindset of an equity investor. You cannot come to the equity market with the mindset of a debt investors. Am I right? Fixed income, this one. Please come to the equity market with the mindset of a equity investor. And what is the mindset of an equity investor? He's willing to see the downside. He's willing to take a hard decision. Why? Because he knows very well that if I remain in a disciplined manner with patience, I am going to create wealth for my portfolio. But unfortunately, do not want to take pain, but we do expect gain. तो कहीं नहीं होता है सर, कहीं नहीं होता है. So my request, please create a mindset of an equity investor.
This one question by Mr. Karthik. He says, if there is no human emotion, then how do you decide that the company will underperform? Especially if it's bought and sold in the same quarter, then does it only follow technicals alone?
So two things undergoes change: valuations, results that could come because every quarter number would come, and the technical dot. And based on 3 factors out of 4, the score can undergo change, and that's why we advise you to exit. That's what it works, and it's rightly so, because you would have seen, as I was telling you, Vaibhav Global classical example. Again, I request all of you, please look at who are the investors of Vaibhav Global. Not now, for many years. Some of the smartest investors on the country and of the world have invested in Vaibhav Global. Was it our call was wrong to exit from that company? The answer is no, because we don't have a place for human emotions. We may ask you to book losses. आपको थोड़ा दिक्कत होगा तभी short term में. But when the moment you expand your time horizon, you will see there was a lot of merit in terms of exiting. I know many investors did not move out of Vaibhav Global. Why? Because वो emotions में आ गया.
Okay, I'll just pick this one question by Mr. Rao. He says it's a tough question for you. He says you proudly differentiate yourself with mutual funds and PMS houses during the upcycle, but you're also frequently quoting these names when they have underperformed. Could you provide your opinion on this?
No, sir. Okay, let me clarify. It's a brilliant question, Rao sir. What I'm saying is very simple. The reason I'm giving you this because someone suggested your strategy is wrong. So I said, if my strategy is wrong, then others should be making money for you. Am I right? I'm giving you the perspective to understand the problem. I'm not trying to defend or something. I'm giving you a perspective how overall market is underlying that it's a much more declining. And if you look at all our, the moment we expand our time horizon, even as on today, I speak despite booking so many losses, you expand our time horizon, look at 2 years portfolio, markets model would have been the best performing portfolio as compared to any PMS or any AMCs. But unfortunately, we were basically carried away by the short term because we are all emotional people, am I right? And emotions, we are not able to see 2 years time horizon. We are all victims of recency bias. Immediate past mein kya hua hai, that only we remember. We don't remember what has happened over a longer period of time. And unfortunately, our decisions are always taken. I was reading one beautiful article which says that most of the investors in a mutual fund scheme also will try to invest only those schemes which has performed extremely well over a last 1 year. Am I right? Same way, investors will try to chase those companies which has done well in last 1 month, 3 months, and 6 months. Am I right? That's what happened. Or you will try to chase a sector which has done extremely well in the recent past because of recency bias. The moment you expand horizon, I do that. So when you look at our performance over a longer period of time, we have this, our all performance available on our website. So whether it's for model portfolio, whether it's a Mojo Infinity, and you can see how despite such a bad market conditions, we have created a lot of wealth for the investors.
Okay, I'll pick this one question by Mr. Rajesh. He says that is it a live or a recorded session because his questions are not picked up. He says it's.
So now Rajesh, आपको पता चल गया ये live है क्या recorded है?
Yeah, he says it's impossible to book loss on the recommended price. He says there are markets for the customers selling the next day and partial sell does not work either. Hence, we end up selling the stock further down from the price we recommended. Could you provide your opinion on this?
Is he saying that even if you recommend partial sell, I think the investors tend to sell everything at one go and create a downward spiral? Is that what the question is?
Yes, and also whenever we advise to sell, he won't be able to exit at the price we recommend because of other investors selling.
What you are saying could be a fair possibility. So what we advise investors is that don't try to sell in first half an hour of the market opens, because first half an hour is always more volatile market. Whether it's say we advise you sell or not, it happens to all the stocks which are trading. And then you don't give a market orders, give a limit orders. If you are not able to exit or buy, as the case may be, you can always wait for one more day. That's fine. So that's what my suggestion would be, sir.
Okay, I think we're finally seeing this question now. Ms. Mamta has asked that, Sunil Bhai, what's your opinion on metal stocks? Do you think they have bottomed out? I missed selling out on Tata Steel, Hindalco, etc. So what do I do now?
So, Mamta ji, see, this is the classical example of human emotions. What price did we ask you to sell Tata Steel? In excess of 1,000 rupees. What is the price now? So, and see, if the world is going to slow down, very obviously the demand for the industrial metal will slow down. And if the demand for industrial metal is going to slow down, very obviously it will impact the metal company's price. So my advice to you, ma'am, please move out. And that's why I said, please have a guts to book losses also. And once you do that, we are creating liquidity. Otherwise, क्या होगा? आप इसको लेके बैठे रहोगे सालों साल तक. पैसा बनेगा नहीं, and you are not creating liquidity, because with the moment you create liquidity, you will have an opportunity to invest in other stock. So please move out of this.
Okay, I can see a couple of investors asking for the 5,000 upgrade link. And I think the upgrade link, you could just simply reach out to the feedback team and they would send you the link. I'll just drop the links for the other offer in the chat box.
Okay, let me take one question from Mr. BA. Now, look at his question. I don't know, BA stands for his degree or his name, but Mr. Damania, I have been attending your webinar consistently for past 3 years. I again repeat, Mr. Damania, I have been attending your webinar consistently for past 3 years. Mr. BA, we have not been conducting webinar for the last 3 years. So I don't know whose webinar you were attending. Oh, sorry, I was not conducting from last 3 years. You constantly claim that you have given handsome returns again. This is totally false. Sir, first thing, I don't know whether your claim is false or not. Because you are saying that we are conducting, you've been attending my webinars for 3 years. And then he said, let's have an open debate in the forum. So what debate you wish to have it? Have you created model portfolio? And did you see the performance of the last 3 years that you have been doing? If you look at it, you will realize what kind of wealth we have created, sir. At the same time, my request to you, sir, please go to www.marketsmojo.com. Go to Mojo stock section, where look at the full list and then look at how we recommended when a company entered a Mojo stock, when it exited, and whether it exited at profit or at loss. We have given the complete list, sir. It's not that we have done editing there. And you can say where we have gone right and where we have gone wrong, sir. And then let's talk based on data. I hope that satisfied you, sir. In case if you still believe that we are fast, sir, please, you can have your opinion. You are entitled to have an opinion, but I don't agree with your opinion, sir.
I'll pick this next question by Mr. Anup. And I think when you were making the 15,000 predictions, a lot of investors have asked this. He said that you were saying that market will touch 15,000 when it was about 18,000. Don't you think we should have just exited at that time? And now when it's touching 15,000, we should simply buy. I understand that you are a very experienced person, but you could have advised us to exit at the start of the fall.
Now, some of the people have written in response to this one that we are doing webinar from last 1.5 years, but he happens to be attending from last 3 years. So I don't know. There may be some other Sunil Damania whose webinar he must be attending or maybe he must be hallucinating that I've been doing webinar from last 3 years. So it's a thing, but it's a good fun to have this kind of a question coming in. That's why I said that people do take emotional elite charge, and that's what must happen with BA. I don't know if it's a male or female, but that's what happened. Yeah, yeah. So thanks for giving that credit that we have been predicting very correctly that the Nifty can touch to 15,000 to 15,500. See, remember, we don't take any cash calls on the market, and we have repeated time and again. We have said, if you have happened to attend my webinar, which I've been conducting from last 1.5 years or so, not 3 years, we have been saying that we will not take any cash calls. Second thing, this 15,000 to 15,500 is a probability. See, market has proved many pundits wrong, and there is no guarantee that my prediction would have come right also. Am I right? So that's what has happened. So we don't take cash calls. Second thing, this prediction was a probability, and hence we did not advise you to remain on cash. If you look at our Mojo Infinity also, when we launched in October 2021, we did mention that market is going to remain a little choppy, and hence we are not going to invest at one go. We'll invest one third. So that's what we did.
Yes, Mr. Sunil, that's with the Q&A session for today.
So thanks a lot, everyone. Again, my request to all of you, please learn art of booking losses. Forget about markets, Mojo, model, Mojo Infinity in your personal portfolio also. If you don't do that, I'm afraid you will not be able to create wealth for yourself. I want, sincerely, you want to create wealth in your personal portfolio, create wealth for your family members, and that can always be possible if you are disciplined in terms of booking losses. The three great investors I've given you quote, please remember those words, and you will see how you are able to create wealth for yourself. If you are finding little difficult to book losses, become a Markets Mojo subscriber only at 14,999 for 27 months, 550 rupees per month, less than 20 rupees per day. I'll request again Jason to please drop the link so that everyone can get this.
Yeah, just before I drop the link, Mr. B has actually replied. He says, Mr. Damania, I've received an email that I've attended 168 webinars in the last 1 year, and I've been a Markets Mojo member since 2018. Okay, so that still doesn't sum to 3 years, sir. But yeah, I'll just drop the links. Looking forward to seeing you all come for the events tomorrow as well. Tomorrow we have a topic on the inflation, and Mr. Sunil Damania would be summing up as to where we see the markets heading, as well as the pressure from US. And looking forward to seeing you all come for the events. Goodbye. Have a great evening. Thank you so much.
Thanks a lot.